Anybody note it down? 10 o'clock last night, the GDX flip was 29.5. Did anybody note it? Did anybody write it? Did anybody take any heed? Did anybody recognize the opportunity this morning? Did anybody decide to do anything about it? Did anybody pay any attention whatsoever to any of the stuff I actually show in the twits? This is what happened this morning. 29.5, bottom edge, buy side, pop. 10 past 3 this afternoon. 29.5 GDX. This is the GDX market. This is the gold miners. GDX flip was 29.5. There it is. There's the price testing into 29.5. There's the buy side bounce today. That is worth $300 per contract. That little buy opportunity is worth $300 per contract. So it might sound like I'm being silly about it. You might think, what the hell? But if you can read and you draw the levels and you are really serious about trading this market, would that not be something that is an essential you must have on your screens? Absolutely, as an essential, you must have it on your screens. And it's been there since 10 o'clock last night. Absolutely, right? Abso-fucking-lutely. Of course it must be an essential. So we know that there's a big flip price here on GDX, and therefore we might as well pay attention to it because it's in the vicinity of today's business. And there's the buy side bounce. There it is, right there at 10 past 3. Not the biggest trade in the world, about $300. $300, guys, that pays Smart Alpha for 6 months. Just on one trade. Just on one trade. We said that the S&P was a bit expensive at the top edges. The volatility seemed to not be cheapening at all. So did anybody decide to get short at the top edge retest? Anybody decide to get short off of that high print just up here? It's worked out quite nicely. It's came back down into the 15 to 20 area. And obviously we're back into this danger zone. And there is a danger zone because I'm not liking the graphic behind that danger zone at the present moment, guys. I am not liking it one little bit. So for me, it's certainly not a buy off the 15s. Certainly not a buy off the 15s, that's for sure. And it's pressed through the 15s for the time being. So this is now the kind of buy side, sell side level that I'm working on, is the 15-17 area just now on the S&P index itself. You might be wondering about the idea behind this, and it's very simple, guys. It's very, very simple. I said to you at the time, the volatility is expensive. So if we understand the volatility is probably the key internal of the marketplace here, we can see that volatility is very, very expensive on that retest, isn't it? Look, see how easy it is to spot the volatility is expensive? You can draw a line. Straight line at the top edge, a diagonal line coming off the top edge. Volatility is expensive. I want to get short S&P. So if I want to get short S&P, we're better to get short S&P than into a prior high, day high, swing high, and then the sell-off coming away from this. Now we've obviously got to try and negotiate the 15s to 20s. We bounced once. The volatility was still expensive, and we managed to break our way through the bottom edges. Now into this price area here, you can see that volatility still looks quite expensive. So this still is a picture that looks bearish. But obviously this is now it looks as if it's a bit of two-way money because we've never seen an acceleration below there. So obviously if they were going to start selling against this, we would have expected to see these three candles here, these three red candles, or that two red candles in a spinner. We'd expect those candles to accelerate. The fact that they didn't accelerate makes me a little bit more bullish than I should be. And obviously we've got a reversal trade coming back up and an unwind there. See how we get the unwind candle coming in there? It's pretty clear. So when we're looking at this again, we're obviously very, very mindful of this whole process. And it might well be that they run some paycheck, but obviously if the value changes above the 20, then there's always going to be that chance, of course, that they may well just hold on to that value because, as I said, this should have been big candles, not small candles. This is true of any key wholesale price level. If you're going to get hedgers at that wholesale price, The candle should be big. If the candle's small, that tells you there's a commercial buyer buying the hedge trade. If the candles are big, well, you've got your answer. Nobody's buying the hedge trade, so the price is obviously directionally bearish off of the RGL at that point. Every single wholesale price has that quality about it, guys. Every single one has that quality. If you get a big candle away from a wholesale price, you simply use that wholesale price now as a zone that we can trade in. If you get small candles away from a wholesale price, then you know for a fact that there's a higher probability that it's being absorbed for a sell or a buy trade.